This will be a very important week in the markets. On Wednesday, we have the FOMC meeting. So that's very, very crucial because characteristically each month we see a very large move on the day of and also the days following this meeting. That's going to give us a glimpse on what the Fed is doing. And then also later in the week, we have the GDP report and data coming out. It's actually concerning because the White House posted 3 days ago this article where they're kind of redefining the definition of what a recession is. Now, technically, yes, there are many variables that determine whether a recession is occurring or not, beyond just the GDP data being negative for 2 quarters in a row. However, it is concerning that they posted this article ahead of this week where we receive the data. They may be doing this to kind of soften the blow of what may be coming later in the week. So it's going to be very interesting. Plus, we saw a lot of put flow hit the tape after hours on Friday. This was very bearish in terms of the put flow. We saw millions of dollars worth of premium, as you can see here, and all of them were mostly above the ask, as you can see in our order details. It showed above the ask on these. So very bearish prints, especially for a Friday after hours, because we tend to see big money kind of sneak in a sense. Now, it doesn't have to be deliberate sneaking in or anything, but big money is getting in on these on Friday after hours when a lot of people kind of like leave their desks. So this could be a catalyst for a Monday or Tuesday downward move or continuation of kind of what we had here after we broke this major channel to the upside. As you can see with my arrow here, once this broke, we fell down, went to the next support, which is that very key 2009 trend line that I've talked about in many, many videos, which you can subscribe below and check those out if you haven't yet. And we actually closed right on that line later in the day to show its significance. It's the second time of last week alone that we closed on this line, so it is very significant. And it basically is the MM saying, we're not going to give you a bias for Monday. You're going to have to figure out yourself because we closed on this. So now we don't have a bias to the upside or downside. It's right on the line. So it's going to be very interesting on Monday. So with all of this data coming out, it may kind of sound like it's a bit bearish going forward, which by all means we could continue to fall down. And I actually expect a bit of a pullback, especially off of this rally. You can see here on the 15-minute chart, we had this massive rally from all the way at 370 lows all the way up until 400 on SPY. This is a very, very large rally in a short amount of time, literally just last week. Honestly, it was just last week that we went all the way up $30 a share on SPY. So a pullback definitely is possible, and that's kind of what we're seeing the start of as of now. And it could continue down, potentially retest this key dark pool level. This is a signature print level at 389.95. That is a very interesting level that I may potentially load for a long. Now, this could continue to fall down lower from there, especially with some of my trend lines I have below, as well as my SPX chart, which I do have a lot more trend lines on. That's why I'm not on it. It could be confusing. But in terms of this week, there is going to be a lot of volatility with all of this news. However, I personally believe this is only a pullback for our continuous upside move that we've had so far. So I believe this is kind of a pause in terms of our upside momentum and bullish momentum. And after this week, I think there is potential, or maybe even at the end of this week, there's potential that we could have a rebound and continue upward with the momentum we had from before. I don't believe, personally, I could be wrong. Again, I'm just giving you my opinion. You can take it with a grain of salt as you have done in the past, but I personally believe this is only a pullback for this week at most that will actually act as a spring and continue higher to further fill this gap that we did not actually fill. If you remember from before in the video, I said there's a potential for a fake out when we're in the middle of this gap here. We saw it last time. Remember, there's 2 big gaps. We have the one over here and then the second one over here. 2 big downside gaps. The first time we tried to fill it during FOMC, actually, this was the FOMC day that we had in June, and we actually went into the middle of this gap and it fell straight down right off of that. And this was a big fake out for the bulls that we did not, we weren't able to complete the full gap fill. Later on, we ended up filling the gap on this one, and that's check mark on this gap. Now, right here, we had a lot more than halfway, like about 3/4, maybe even higher than that in terms of this gap. We got all the way up to 400. But yet the gap fill was at 401.50. So we did not complete it all the way. But I personally believe both these gaps will be filled completely. We have one of them out of the way. The second one is kind of next up on the blocks here, and because of this fake out that we had here, we're kind of going to start seeing some bears get baited back into it, especially with all the data I shared with you at the beginning of this video, especially for this week. And then once it kind of a lot of the bears jump back in and think, oh, this was the end of that rally, that we can continue downward, they were selling this entire way up, then we start to go back up, fill this gap, and continue even potentially higher off of that. So I may sound like a contrarian to you guys. However, I was considered a contrarian when we were down here when I loaded at 375 and was able to get out, which I shared with you on Twitter, around 396, 395, or 395 specifically on SPY for that. So I personally believe this is just a pullback. I think we are going to bottom within this pullback around this range. I'm not specific on what level it may be. Very difficult to tell with all of the volatility we will experience with this data. However, this week, especially in the middle of the week, I'm going to take it as a chance to load dips around this like 389.95 level. Maybe even if we go lower to 385, I'll continue to low. Stop would be under 382, especially on the daily. That is a wide range, and I will respect that I am giving you a wide range, about $8 of loading for here, but it is time sensitive. I believe we will have a rally after this week, so there's a little bit less risk because the timing, I'm not holding for like weeks upon weeks or months at least, and I'm going to make sure that I size in appropriately as we go down. Most of the money I made was during this original rally, so this is kind of me throwing in profits for potential upside on those as well. So just giving you my thoughts on it. Again, we can continue to fall lower as of this week goes on, but I believe after this week we will see some of a bounce going forward, and I'll kind of let you guys know in the Discord what my thoughts are as the week goes on, because a lot of things can change with the market having all of this news. So you may be asking, Ben, why do you think this is actually not the top of this big move upward, and you think we're actually going to continue to go higher off of here? And there's many variables like I've shared with you in past videos. I don't go off of one variable, two variable, or three variable. There's a lot of things that go into my thesis, as well as experience with the markets and understanding volatility at the moment, kind of the structure of how the market's working. We call it market dynamics. But a main variable that I believe personally that the upside is not done yet is on the dark pool. So if we go to dark pool levels, this is the fourth tab down for the pro members of the Cheddar Flow application, we could actually see there hasn't been that many prints in the dark pools yet. 1.3 billion, decent amount, nothing too crazy. Again, anything over 1 billion for signature prints is noteworthy to say the least, but we were seeing billions upon billions prior, around the range of 375 to 385 before, like during this range back here, especially 2 weeks ago, like right around this range where I'm circling right now, we saw a lot of prints, billions every single day, and then we continued higher and went straight up through here. So 1.3 billion, not very much in terms of what we saw Friday hit the tape. If we go back to Thursday to see what happened there, only 596. That's nothing. 596 million is nothing in terms of signature prints, at least comparatively to what we saw before. Day prior, 1.3 billion. Again, nothing too crazy. Still could be selling on the way up, or trimming on the way up, that is. And then 3 billion, this was from 381. So this is what I was referring to earlier of us loading around this range on SPY. So we haven't seen that much of selling yet in terms of the dark pools as we made this move up. That's very critical in terms of my thesis right now, because all of that like billions worth of dollars that were getting loaded up around here in the dark pools, we've only seen them kind of like trim in a sense as we've went up so far. So they haven't sold all that they were loading up over here, which leads me to believe there is some more continuation for this rally. Also, another thing with that, if we go to the daily chart, we did have a daily close above, I'll go back here, we did have a daily close above my yellow line, the one that goes back to 2009. I'm not going to re-show how I charted that. I've done that in many videos, so you can go back to previous videos. I think I've done it in the last one and also the one before that, so you can check how I charted that one. But we did have a daily close above, which is pretty bullish, and then the following day we closed right on it. Again, there could be some more downside for this week in terms of the daily candle, so we could close back below. But I do like this big rally we saw on the daily for SPY. This is showing a lot of momentum going forward, especially with this gap up here. This gap and that we could potentially fill in the future after we had a big fake out. Remember last time we had a fake out, it rebalanced for like about 4 days or so, and then we went up and then filled that gap later on. So I believe something similar might take place this week if the history does repeat itself, which doesn't always have to, but if history repeats itself in this case, which I believe it will, I think we'll have a few days maybe down from here, especially with all that data, and then we kind of bounce up off of that and fill this gap finally, so we can fill both of these gaps, which, by the way, if we do fill both of these gaps that we have, first of all, these are very, very bearish gaps that are very big as well. We gapped down a ton at both of these times, which shows a lot of bearish force downwards. If we fill the gaps to the upside, that's actually very bullish because it kind of reclaimed both of these levels after having such a bearish emphasis down. So there is potential we continue to run off of that, but that's for a future video. And basically, one more thing I want to talk about is DXY. So DXY has been getting very bearish after we had this top occur back here. I've been talking about this in some of our previous videos, and lately this has been getting hit really hard in terms of downward pressure. We saw day after day red. Now it's kind of like making a bear flag on the hourly, and I'll show you right here. Kind of like a flag pattern, bear flag pattern on the hourly that we did close right on the bottom of this trend line. So it could chop some more if it wants this week. But as of now, it is bearish. And unless we get back up above 108.50, which is right around here, then it would continue downward all the way to 103.50 in my opinion. So that would help with a bid for SPY and the market in general, which could help us with continuation upward.